Good morning, good afternoon, and good day to you all, and welcome to Pathway to 17 Summit for 2024. And welcome to this exciting session that we have titled Data for Inclusion, Leveraging Gender-Disaggregated Data during day one, which has an overall theme of gender equality. My name is Tariro Nyimo, and I am the Head of Stakeholder Engagement and Fundraising at Digital Frontiers. I'm also FinEquity Africa Regional Facilitator. It is my great honor to be moderating this session with two experts that I greatly admire who are championing initiatives in this area. In this session, we will have a two-part presentation, first exploring CGAP's work on supply-side gender-disaggregated data with Yasmin Bin-Humam, a financial sector specialist and policy expert at CGAP. Welcome, Yasmin.
Thank you, Tariro.
And then we'll explore data-driven credit scoring for women's access to capital with Toni Weis, a financial sector specialist at the World Bank Africa Gender Innovation Lab, which I am a big fan of. Welcome, Toni.
Awesome to hear, Tariro. Thanks so much, and hi, everyone. Great to meet you guys.
Okay, fine. So after the two-part presentation, we will have a brief discussion and then get into Q&A with our audience. So please, if you're in the audience and you have your own stories to share about gender disaggregated data and collection thereof in your countries, please share in the chat. And Caitlin will be sure to let us know, and maybe we can discuss some of the experiences that we see. All right. So now to start off, we know the importance of high-quality gender-disaggregated data and its importance on policy or establishing data-driven policy design or gender-intentional product design. But from you, Yasmin, we want to know from the work that you did or the research that you did with CGAP, to share some insights on how data is collected and what are some of the constraints that you've seen in this study. So I'll hand over to you, Yasmin.
Thank you very much. And if I could request that my slide be put up, I just have one slide as a visual aid, largely for the audience to follow along. Excuse me. And to put this in context, CGAP is 2.5 years into a project developing guidance on what we call supply-side gender disaggregated data. Now, that's data generated by financial service providers over the course of business, things like number of accounts, value and volume of transactions, the channels used, numbers and types of complaints, and these kinds of things, data that tends to be generated in real time as compared with demand-side data, which I'm sure many of our audience are familiar with, which is data collected by surveys of consumers regarding their preferences and habits, things like the Findex data, the FinScope, and various national initiatives that usually happen like every 1, 3, or 5 years or so. Now, what I'm presenting here is what we call the virtuous circle of supply-side gender disaggregated data. And in the center, of course, we have the financial service providers themselves. They are the ones who generate the data points, right? And so in the first instance, the providers will use this data themselves for design of products, services, marketing strategies, strategic expansion plans of their initiatives and products and branches. And Toni will be able to provide us with a number of examples of how gender data feature there, and perhaps some audience members have worked with financial service providers in this kind of a manner, and I would encourage them to drop you a note in the chat to let you know if they have examples or thoughts to share on that front. So in the second instance, then the data that's generated by providers is reported to financial sector authorities. More often than not, it's a financial sector supervisor, and these supervisors can come from different branches within the central bank or the Ministry of Finance or Treasury and whatnot. But we just kind of, for today's purposes, are going to lump them into one bucket of financial sector authorities. And from there, the data really, as we see it, goes into three manners of uses, which I'll just briefly describe in turn. So in the first instance, the financial sector supervisors will use this data in their oversight of financial institutions to monitor compliance, to ensure appropriate market conduct, to assess microprudential risk dynamics. And in all of these instances, there's use for gender disaggregated data. So for example, Tanzania and Ethiopia both have requirements for women's representation on corporate boards of financial institutions. Studies show that firms with greater gender diversity on their boards tend to have better risk profiles and better customer engagement and so on and so forth. And so the financial service providers report these statistics to the financial sector authorities. But supervisors can also look at things like whether there are gender differences in interest rates and rejection rates for credit. And in fact, this is what financial sector supervisors in Mexico did. And they found a gender bias by financial service providers who were providing women with lower credit amounts and higher interest rates than men who were similarly positioned. And what the supervisor did in response was they lowered loan loss provisioning requirements for certain types of credit to women to try to balance out this practice by financial service providers and encourage them to lend to women and really see that there's strong market potential there, which they did to some degree. But supervisors can also look across providers and aggregate numbers to see things like customer complaints, to see if enhanced efforts are needed in digital or financial literacy for certain segments, if there are gender differences in customer complaints. Now, CGAP has done extensive demand side, not supply side, but demand side research on consumer protection issues in digital financial services in the WEMU region in West Africa. And there are interesting patterns arising, particularly with regard to customers reporting fraud. And, these kinds of initial demand side insights can be complemented by, looking deeply into supply side data because it's more accurate, more real time, and more granular. So that's one pathway of the reported data to authorities. A second use of reported gender data is for authorities to aggregate the information and report it back to the sector, to the financial service providers themselves. And it can then be used as market intelligence by the financial service providers to see the size of the women's market, to see growth trends. It can be used by support organizations that provide non-financial services to customers. It can be used by investors to understand where and how they should direct their funding for gender impact. And coming up, I don't know if it's launched yet. I know that it was set to launch, but Nigeria has a very sophisticated dashboard in this regard where you can see, number of accounts and value and so forth aggregated by gender, and you can even zoom in by city and see the gender disaggregated trends there. Rwanda is a case that we at CGAP have been studying closely. It's incredibly unique because the National Bank of Rwanda has developed a very sophisticated database and internal dashboard where they are collecting sort of real-time data from financial service providers. And because the data points are linked with unique identifiers from the national ID card, you can see the gender of the individual who has the account or is making the transaction or has received the credit or whatnot. And this is poised to be a very sophisticated tool for the national bank. And ultimately, they will be able to, provide aggregated numbers on all kinds of statistics to report back to the market in this regard. So we're really looking forward to seeing that. Excuse me. So the third pathway that I'll describe is for the data to inform regulations themselves and policies. So for example, regulators can look at whether there are gendered patterns in the use of digital payments. And if there are, what are the natures of those patterns? So for example, we see that women are much more likely to use agents to help them conduct transactions. They prefer agents over ATM outlets. They like that human touch and that support and that guidance. And of course, this has implications for, where financial service providers should distribute their agent networks. And how. And it has implications for capacity building for women clients. And so, for example, in Nigeria, we've already seen that they've developed a national strategy for leveraging agent networks for women's financial inclusion. Similarly, in Pakistan, they've actually been collecting gender data from financial service providers since 2017. And that data has been used to inform their banking on equality policy. It's got numerous targets for women agents, for women champion branches, for outreach by financial service providers to women clients, and so on and so forth. So this, in a nutshell, is what we call the virtuous circle of supply-side gender disaggregated data. And before I turn it over to Toni to do a bit of a deep dive on data used by financial service providers, I just want to make two more quick points. And the first is that what we see in Rwanda, this kind of real-time integration of data, real-time reporting of data to the supervisor, that is incredibly rare. There are data governance and protection requirements that are very complex. It requires expensive software, and much more likely is that authorities ask for particular data points in particular formats at particular time intervals, right? And so the authorities already have a use case for that data point in mind. They already know what's the analysis they're going to do with the data, what's the objective of this analysis, and what kinds of actions can they take based on the findings. Because authorities, they need to be judicious with their time and with their resources. So CGAP is developing a number of use cases and indicators that can help financial sector authorities in this regard, to have a starting point for what they want to request. And finally, often financial service providers report such kinds of data to authorities out of compliance, out of obligation, but it's not always accurate or timely, or some financial service providers may choose simply to pay a fine and not report it at all, just because of the level of effort that it takes to collect and clean and report the data and so forth. So a really good starting point for financial sector authorities is to consider what is the data that financial service providers are already using in the course of their business, or what is the data that would also help the financial service providers, in the course of their business, and how can that be of use to financial sector authorities? Because that's when we're going to get the most accurate and the most timely data from the providers. I'll leave it there for now, and looking forward to engaging. Thank you, Tariro.
Thank you, Yasmin. I think that is it's been very informative looking at that framework and how data is collected from the provider and then reported back by the regulator, for different purposes, and how the examples that you gave, that data actually informs policy, like what happened in Mexico, and how women were affected in a positive way because of the data that was collected in there. And also you highlighted some countries that are doing it right, or that are at least heading in an innovation and positive way, such as Rwanda and Nigeria. So interesting to watch those. And maybe our participants from those countries can tell us more about what's happening, or what they think, or some of the difficulties. You said it's a rare thing, especially in Rwanda, expensive and software, all of that, how the implementation of it and how they got support, or how they're making sure that the data is reported in real time and it's disaggregated and giving that trend. I am excited to hear what Toni is going to share with us now regarding the use of data and how it can inform gender intentional product design. So I'll hand over to you, Toni.
Thank you so much, Tariro. One slide for me also. So as we heard from Yasmin, there's a case to be made for gender data to build a more inclusive financial sector overall. And what I'm now trying to do in the next 10 minutes is talk a little bit about one aspect, which I think is a really crucial aspect within that ecosystem, and that's access to credit. Tariro, you already mentioned I work for the Africa Gender Innovation Lab at the World Bank. We're essentially a research team within the bank working on kind of innovating, designing new interventions, and then testing their effectiveness in helping teams within the bank, other donors, but also players in the private sector scale up interventions or products that we think are impactful and that really have the potential to make a difference. So within that context, we've done over the past few years quite a bit of work on women's access to capital. I'm lucky to lead a small work program on our team called Innovations and Financing Women Entrepreneurs, which essentially is trying to build these tripartite partnerships between our team, financial service providers such as banks, microfinance institutions, and then fintechs, to help the financial service providers better serve women entrepreneurs, women clients more broadly. And so we try to introduce new techniques of credit scoring, for example, and then make those part of really the modus operandi of the institution, and try to, wherever we can, capture lessons from that might be relevant for other players. And where we can, as a research team, we try to do that through randomized controlled trials, but we work through a whole range of methods in this area. Now, why is access to capital such an important topic for us? Maybe some of you have seen a report that we came out with a few years ago called Profiting from Parity, which really was our attempt to kind of summarize the state of knowledge around women's entrepreneurship in Africa. And one of the findings that came out of that report was really this massive gender differential in the capitalization of male and female-owned firms. So male-owned firms on average, and what we saw from survey data across the continent, have 6 times the capital invested compared to women-owned firms. And that, of course, has a lot of consequences. It determines the sector that a business can operate in. It determines who it competes against, and so on. And in a more recent report that I'd encourage you to Google, or happy to share the link as well, my colleagues Sri Papineni and some collaborators talk about the profitarchy, the global profitarchy, in the sense that there's a hierarchy in terms of profitability of firms. And at the very top, if you look anywhere in the world, you have male-owned firms in male-dominated sectors. And at the very bottom, you have female-owned firms in female-dominated sectors. And so if we want to, try to bring women-owned firms up the pyramid, then access to credit, access to capital is obviously a crucial aspect to consider. The constraints we see, of course, and I'm not telling anyone who's working in FinEquity or in the FinEquity space anything new, is that women are facing bigger obstacles when it comes to access to credit, whether that's because they're less likely to have an entry in a credit bureau, whether that's because they have less access to collateral. And so helping financial service providers make better sense of their borrowers, of applicants for credit, can be a great way to, one, get more women to access capital, and two, get women who already have access to, access capital at better conditions, larger loans, longer tenors, lower rates, and so on. What I think is really fantastic in this space is that there's not just one set of data to work with. There's a whole lot of different types of data that FSPs can tap into, and that's kind of what I tried to capture in this on this slide. These are all ongoing pilots or research studies that we have at the Gen Innovation Lab at the moment, and they look at vastly different kinds of data. I think one thing to maybe point out is what I see as this trade-off. It might not be quite as linear as the slide suggests, but this general trade-off between the availability of data and the predictive power. So you can build credit models that are extremely predictive, but they will need quite a bit of data, quite a range of different types of data. But then on the other hand, you can build, tests and credit scoring models that require just very basic data and then have some predictive power. They're better than nothing, but you might want to combine them still with other kinds of assessment, other kinds of risk management. And so if we start at that point, one study that some of you may have heard about was around psychometric credit scoring. We ran an RCT, a randomized control trial with a microfinance institution in Ethiopia called Wasasa Microfinance, where we partnered with Lendo at the time. We've now moved on to a new psychometric test provided by Core Metrics. We also work with the firm called Principa in South Africa that some of you might be familiar with on this topic. But it was really the idea that if you know nothing else about a borrower, nothing about their financial history, you can create at least a personality test on the spot as they walk into your branch. And that personality test might not tell you everything about the firm. It might not tell you everything about the borrower. But, out of the 5 C's of credit, as we call them, character is an important one. And this is, in this kind of personality test, is one way of getting at character, and at one of the sort of at the underlying stable traits of personality that might have some predictive power in terms of the ability and willingness to repay. So we can try to understand a bit better, how structured, how organized is a borrower, how somebody taking the test, how are they able to, delay gratification, these types of things that might be of interest to a borrower. And so we saw in this particular study that it really helped, reducing collateral requirements and replacing them with a psychometric test. It really helped make the product a lot more inclusive. The women in the group that received the loan, following up with them after 1 or 2 years, had vastly larger access to capital than women who had similar credit scores but weren't able to access a loan. Now, when you move into slightly more involved data, that's where things also start getting more interesting. So we have done work with Access Bank in Nigeria, for example, on cash flow-based data. Again, this is fairly straightforward. It's just, these are just spreadsheets. The loan officer sits down with a business owner and goes through some self-reported data, or maybe financial statements if those exist and they're reliable. And based on that very basic cash flow data, we can already get a sense of what is the capacity for borrowing. Is the firm able to repay over time? And again, we were able to run an RCT with Access Bank and saw again a large effect in terms of both the inclusiveness of the product, but also the level of investment that these firms that were able to access the loan had over time. A third pilot worth mentioning is using very basic data that every microfinance institution, every bank, no matter how basic, no matter how simple their record-keeping system is, will be able to do, and that's just understanding repayment data. So a lot of microfinance institutions that we have been working with that aren't as technically sophisticated don't actually discriminate or distinguish between new borrowers and existing borrowers, and that's, I think, a very, very low-hanging fruit. And we worked with Inspiring Development, which is a financial sector consulting firm, and two of our partner microfinance institutions in Ethiopia, to really come up with a very basic traffic light system in terms of saying this person has borrowed before. Are they a green light? Are they a yellow light? Are they a red light in terms of renewing their loan or maybe scaling them up over time? And I think what I really like about this, again, it's a very simple system. Any loan officer can kind of understand it. It doesn't require fancy technology or anything like this, but really, really accelerates repeat borrowing and helps women access larger loans over time. Getting into more complex forms of data, one pilot that I'm extremely excited about right now is a collaboration with the Cooperative Bank of Oromia, which is one of the sort of digital lending pioneers in Ethiopia. And we've worked with them on a product that is the first of its kind in Ethiopia and probably in many other markets as well, where a bank is issuing a loan without a fixed interest rate. So it's a loan where instead of saying you're paying 15% interest a year, you are promising to pay X% of your revenue in a particular month. So whether that's 5%, 10%, no matter what, what the financial model says. Obviously, what that requires is having a good understanding of what the borrower's actual revenue was in a given month. Helping the bank kind of come to a comfortable assessment of that and having some faith in the reporting that's happening. So what Co-op Bank did is that they developed SUKPay, which is SUKPass, which is their MSME lending and engagement platform through which firms can register their transactions, register their inventory, and track all of these things over time. And so the bank signs up prospective customers a few months before they receive a loan. They start using the platform, tracking their transactions on the platform, and then they start qualifying for the loan and repaying them based on interest. And then getting really into the 360 vision of a firm is one new pilot with Ghana-based fintech called Oze, again, a firm that maybe some of you may be familiar with, that works quite a lot across Francophone Africa with the Eco Bank and some other partners. And what's exciting there is that you can really as a lender, get a very, very detailed view of your prospective borrower, and not just of their credit their credit risk, but also of their needs. And what's, I think, special to that particular approach is that you get the data both on the borrower side and on the bank side. So their model integrates data that is captured by a revenue tracking app, or like an app that you can use to manage your small business, that helps you process payments and all of these things. But it also plugs into the core banking system of the bank and helps the bank understand what's been happening with this client. If they've had a bank account before, if they've borrowed before, how has that performance worked over time? And by combining the borrower side data with the bank side data, you really come out with a very, very strong understanding of like I said, not just what the borrower's risk profile was, but also what are some of the what is the loan size that might be relevant to them? What are they able to finance? What are the times of the month or the times of the year when it makes sense to offer them a loan, and when can you expect repayment? All of these aspects that help you actually make sense of the borrower, and understanding also, in this case, the gender differentials, the differentials between women-owned firms and male-owned firms, between the different sectors that might be more male and female more female and male dominated. So I'll leave it at that. I hope what it shows is that, again, a data-driven lending, it doesn't have to mean a fancy core banking system and some bespoke machine learning model. It can just simply mean making the most of the data that you already have at your fingertips, or starting to collect some basic information that you are sure your borrower or your prospective client will already have. And I think that's where it's possible to really move the needle for financial service providers across the spectrum, and not just at the very top end. And with that, I'll hand it back over to you, Tariro. Thank you.
Wow, thank you, Toni. I think I found this very, very interesting. And in your work with microfinances or providers that are actually tapping into this MSME market and looking at their data, or data generated from the consumer, especially the women consumer, is there any data point in your research or in your RCTs that they found and it was quite surprising for them, or that opened it up for them, or maybe there was an aha moment to say, actually, you know what, this is working, and maybe I'm not so sure of the time periods or the cycle that we're in serving the micro enterprises. Was there anything that was insightful, that was surprising, that the microfinances or the service providers saw when they implemented these solutions?
Yeah, that's a really great question. I think aha moments, definitely. What I found really interesting is that a lot of these institutions already had a hunch, right, about how women-owned firms were, in many cases, already repaying more strongly, or at a more predictable pattern than male-owned firms. But they didn't really, have the full faith in that kind of assessment. And I think being able to help them to dig a little bit deeper and really show the data on that, show why it's happening, whether it's related with the sector, whether it's related with the character of the borrower. It really, for some institutions, drove home that point very clearly, kind of really showed them how strongly women were performing as part of their portfolio, and helped them sell to management, sell to the board, their focus on better serving women, and the kind of the need to expand even further into that area. Like, that to me was a really, really great insight for some of the partners. On the psychometric, I would also say, this is an idea that I've seen a lot of doubtful faces going into, a boardroom or speaking to the management of a bank to say, here's a personality test. It will help you understand your borrower. In a context where the standard is, give me the title to your house, and we have a 300% collateral requirement for any kind of loan, to say, well, you can replace that with a personality test. That's a really tall order. So again, what I found fantastic is that I mentioned this RCT and this pilot we ran with Wasasa Microfinance. The biggest change that I saw among our partners was when the CEO of Wasasa Microfinance stepped into a room full of other MFI presidents and said, we really believe that this is working for us. I think that's where we saw them, getting interested, and where we saw really the demand going up a lot for these types of ideas.
Thank you, Toni. And now to Yasmin. So what do these kind of initiatives mean on the regulatory side?
Yeah, it's very interesting because, Toni mentioned the standard being, give me title to some kind of collateral and then you get a loan, and suddenly you introduce, these psychometric tests or alternative, credit scoring based on digital data trails or whatnot. And oftentimes it's not just the provider being cautious. The supervisors are also quite cautious, right? Because they supervise these financial institutions and they come in and they say, oh, the portfolio is too risky, and they'll look at it for a particular financial service provider, and they'll look at it across the market. And so to the degree that such experimentation and RCTs and success stories, I think, are shared with supervisors, I think the data from that, the outcomes from that, it can affect supervisory practice, that they come in and they say, okay, and Toni, maybe you have more insight in the Ethiopia side on, how they changed their practices in terms of, okay, maybe X% of the loan is collateralized and Y% is based on these alternative, credit scoring methodologies. And that's a level of risk that we as a supervisor, will will accept. So this kind of data reporting is very important. I think in an ideal scenario, what you would have from a regulatory perspective, and even from a provider perspective, is a whole of customer view, right? And often that is difficult. And what I mean when I say a whole of customer view is sometimes they report, 30% of our savings accounts are for women, 20% of our credit goes to women, and so on and so forth. But it can be difficult to report in a customer-centric way. 40% of our female clients have both a savings account and a line of credit, but that's the kind of insight that you want. That's the kind of insight that really requires a unique identifier for each customer that's included in all the data points in the system, whether that's a national ID number or a tax ID number, and what I would love to see is something like, of the women who received credit in this form, using psychometric testing and alternative data, X% eventually graduated to larger loans, a year down the line, 2 years down the line, 3 years down the line, to be able to have that customer journey perspective, that data story. Would really go a long way in product development and in understanding how you regulate for customer growth.
Thank you, Yasmin. And as we improve the quality of data, like you said, to inform product design to inform policy. And you mentioned having that unique identifier. It now brings me to data privacy issues and some of the jurisdictions that you both talked about, such as Ethiopia and Ghana, and introducing all these data-driven products or data-driven ways of I don't know, collecting data and informing policy again. So what has been the challenges? Maybe I can start. I can go back to Toni. In the microfinance institutions, from a women consumer point of view, I'm going to give my psychrometric data. Do I understand, or is there a need, or is there a challenge? Is there a process for me to understand what my data is going to be used for? Or maybe in the examples that you gave, they had some kind of training bundled alongside to make you understand what's happening to your data and what it's going to be used for, how you could use it for your benefit, all of those things.
Yeah, I think these concerns are extremely valid, and I think for us in every partnership that we have, we try to do two things. One is that we train or work with the institution, the financial service provider, and especially all the customer-facing team on really having, I think it starts with loan officers, the people meeting the client, to actually understand the product themselves, to understand where the data factors into the product and into so that they then can talk to the client that walks in the door or that they visit at their business, and give them and obtain informed consent. I think that informed consent is crucial, and it requires understanding, which in turn often requires a lot of explaining, because this might be new ideas not just to the end borrower, but also to the team within the institution. So that's one aspect. The other aspect is working closely with the regulator, and again, this is something that Yasmin can maybe elaborate on a little bit more. But depending on the sophistication of the regulator, again, there might be concerns that are entirely valid, and there might be concerns that are more along the lines of, this can't work because we've never done it in the past, and we've heard horror stories, from other countries, even though they don't, those were entirely different contexts, entirely different. So, trying to get them away from making decisions based on vibes and making decisions based on a real understanding of, what is the type of data that is being collected, how is it stored, how is it used, what happens to it after it is used. That's been really crucial, and I think looking at kind of experiences we've had across different markets, often one big differentiator in terms of how well things have worked out and how quickly things have worked is finding these champions within the regulator that don't just uncritically green flag everything that you put on their desk, but that also don't just red flag any new suggestion, but that kind of want to engage in a conversation with you, that want to understand, that want to bring in their the external experts, the experts on their side, to help them think through the process and come to a decision. I think these two elements, working closely with the regulator and working closely with the customer-facing team so that they can obtain informed consent and explain things well. Those are two elements that we always try to bring into every collaboration we start.
Thank you, Toni. And Yasmin, for some closing remarks. So what is regulators, maybe in Rwanda, I know they have data protection laws, they progressives in their approach to privacy and consent and consumer protection. But when you were conducting your survey on supply side gender disaggregated, are there any stories that the data is telling that the regulators were highlighting in terms of privacy?
Yeah, I don't think we have all the insights of that yet. It's still very much an evolving story, an evolving narrative, and there's a bigger team working on this project than just myself, who have a lot of insight. It's just so important that there is good data governance. Data governance is a system, right? It means when are you allowed to collect information on a person's gender? Oftentimes if I go into a bank and they ask me, 50 questions about my life, that's quite intimidating for a customer, and customers might not even want to give all this information, about themselves, especially women who are highly sensitive to, harassment and to all sorts of things like that. But if you have for example, a national ID card with a gender identifier, it doesn't just end there. The data reported to the payments supervisor doesn't necessarily get shared with the credit supervisor. You need an MOU in place, you need agreements in place about which data will be shared, how can it be used. You really want to protect clients from discrimination, especially when you have such unique identifiers, or from policies that might harm them. In Brazil, there is an exception to sharing a person's, gender identifier when you share data, if that is for public policy use, so that it can inform policies and strategies. So, does your data governance regime have exceptions like that? All these kinds of factors are important to consider, and we'll be discussing them in our CGAP guidance on gender data. I think the link may have been put into the chat, and I hope that it can be shared, with other registrants to the summit. This was our first publication, the link that I just described, but we have more publications coming out.
All right, so I really want to express my appreciation to both of you. Thank you so much. It's been a very informative session. I've learned a lot. And so this has been a great session, which we titled Data for Inclusion in Pathway to 17 Summit, Day 1, which is a gender equality theme. I'd like to say thank you to both of you, and see you again next year for another convening.
Thank you.
Thank you so much, Tariro.